I think, again, it was my love for beer and the fact that there is so much opportunity to really change what Indian consumers are experiencing when they order that pint of beer. And that's when we started first with a wheat beer and a lager. And now we have an unprecedented portfolio. We make about 8 different flavors of beer that are available countrywide. We release a new beer every week in our tap rooms, and that innovation sort of juggernaut continues.
That was Ankur Jain on the Morning Brief in 2022, talking to my colleague, co-host and ET's FMCG editor Ratna Bhushan about how his company Bira was changing the way beer was consumed in India. From a bitter beverage to flavored, fun and frothy, from mainstream masculinity to gender-neutral fun, from bland booze to culture code. But over the last 1 year, the company has had a really steep fall, and now it faces probable endgame. I'm talking over 2,000 crore rupees worth of accumulated losses, piling dues to creditors, unpaid taxes and salaries, and an uproar from its employees and debtors calling for the ouster of Jain, who's Bira's founder and CEO. On Tuesday, its largest shareholder and its biggest lender took control of its pub operating subsidiary, also its largest revenue contributor, the Beer Cafe, by acquiring pledged shares. There are apprehensions that its creditors may soon take it to bankruptcy court. So, how did Bira rise and fall? How deep are its operational and financial troubles? What are its investors saying? And what do the next few months look like? Will employees have their way? Will its largest investor take control of the company? Or is it going to go the insolvency route? Listen on, it's Thursday, the 30th of October. I'm Anirban Chowdhury. This is The Morning Brief.
I do not come from a background of beer. I'm a technology guy by training. My first venture was in the healthcare space, and it was only because of my love of beer that I decided to start a venture in the beer space. In the first 5 years of my life prior to Bira 91 were actually at import and distribution company which I had founded, focused on craft beers. It was almost like going back to B school, and by B school I mean beer school, for 5 years before I launched Bira 91.
Jain's entry into the world of Alcobev was accidental. He sold his healthcare startup in New York in the early 2000s, came back to India and realized there was a gap in the beer segment. Beer, which he loved. He saw India was dominated by bland mass-market lagers, which were very different from the craft beers and European brews he had enjoyed overseas. Jain thought urban India needed fun and flavored, millennial-centric beer with global craft sensibilities, and he was going to form a company that would fulfill that need.
And there is a story which he has himself told us that when he wanted to get into the beer business, his father was against it.
That's Ratna.
He started in 2008 and he started importing 20-30 types of beers which did not exist in India. He was beginning to seed craft beer in India.
It was not a sustainable model because for every bottle it sold, it lost a very high amount of money.
That's Manu, senior editor, ET Prime.
And the next step was to make beer in the local breweries. Its choice of location and partners for breweries were very consequential at this juncture. And when I speak to some of the industry experts, they say that Bira went to places like Nagpur and Indore, which don't typically figure in the traditional top beer production centers.
Bira's early growth rode 3 levers: distinctive taste profiles like white and blonde, cultural branding in metros, and aggressive on-premise distribution, helped by credible capital.
And that's when Peak 15, that was at that time Sequoia and Sofina invested.
Sofina is a Belgian investment firm that came in 2018. The big funding, however, came from Japan's Kirin Holdings in 2022. Kirin subsequently grew to own a majority stake in the company. Most of us saw the massive buzz around Bira in its initial years. That's 2015 to 2020. But Ankur Jain mistook that buzz for business. Key reasons where it went wrong: overexpansion without financial discipline and heavy marketing spend and lifestyle brand positioning. Think lavish companies, IPL tie-ups, global sponsorships. All this impacted margins. I asked Poonam Chandel, an alcobev industry veteran and the managing director of NeuWorld Spirits, to explain to me the financial troubles at Bira.
So, Anirban, I would just like to give you a 1 minute kind of a background on how the beer business operates. The beer business operates very differently from how the alcoholic beverages business, which is the rum, whiskey. When we say alcoholic beverages, we don't actually include the beer business specifically. The beer business is very distribution centered, and it is a very low contribution business, which means that you do not make lot of money per case when you sell beer. So therefore, it is key that whenever people launch beer, the supply chain is very well managed, and the breweries from where they are brewing are very closely located to the places where they are supplying to. Because otherwise, your logistics costs will be so high that you will start incurring losses. Secondly, wherever you are exporting from one state to the other state, you have to pay an export duty and an import duty, which will again make the beer an unprofitable venture. That is why you see that there are very few players in the Indian markets that have been able to make a successful beer venture. Okay. And now coming specifically to Bira, if I have to very pinpointedly say that what were the three things that, in terms of financial mismanagement, which I would like to say, is the first was that, there was a huge over expansion that they did, where there was no kind of a financial discipline, because what they did was they did not have a brewery of their own, but they were brewing in 6 different breweries, which is contract brewing that they were doing. And whenever you do contract brewing, then you sign for minimum guaranteed quantities that you will pick up from the breweries. And if you don't pick up those minimum guaranteed quantities, then you end up paying money to the breweries for the minimum guarantees that you have agreed upon. And from those 6 breweries, the presence of Bira was scaled up very, very quickly. It was available in 27 states. So, which meant that the fixed costs, from the very beginning only, the fixed costs were very high. And obviously, the revenues would not have happened, because if you're supplying from only 6 locations across the country, then your freight, logistics, and everything, nothing is going to make sense. So, right from the very beginning, there is going to be a cash flow crisis. There is going to be a working capital shortfall.
Then came the name change fiasco, which the company actually blames for all its troubles today. Bira changed its registered name from B9 Beverages Private Limited to Bira 91 Beverages Private Limited. Here's Poonam.
In 2022, they decided to change the name. And he does it in the most haphazard manner, where they reapply for multiple state excise licenses. The sales were halted in various states, and suddenly their volumes, they dropped. So in 2023, I think they had ended up with the maximum sales volume, which was 9 million cases. Suddenly the sales cascaded down, fell down to 6 million cases.
Were there any red flags in the last 2-3 years from auditors or investors that the management and the founder ignored?
If you read their last report, which is FY24, because after FY24 there is no report that they have uploaded in FY25, the auditors had very, very clearly highlighted to them that there is negative cash flows, the net worth has completely eroded, there is material uncertainty, and still, the management was spending huge amount of money aggressively, whether it was on marketing. I mean, a brand as small as Bira participating in the World Cup was very, very silly, because they were only thinking that there is going to be fresh capital infusion. They had a huge sales force, a huge team, rather 600 people. You don't require 600 people. If you see the manpower strength of companies which are big in alcobev, so for instance, if you were to see the number of people that a company like a Radico Khaitan hires, they have 600 people. So just to sell only 6 million cases, where you are making a net loss per case, that you a gross loss per case that you are selling, you have 600 people. And Anirban, trust me, I have interviewed people from Bira. The I think all the employees were hired at very, very, very high salaries. I mean, I was interviewing somebody from Bira who was a very, very junior resource. But when I heard his salary, my heart sank. So I think all these were very, very clear signs that things are completely going wrong.
According to data in Toffler, which is sourced from documents that are filed with the Ministry of Corporate Affairs, over 4 years till FY24, Bira's losses widened more than threefold to 643 crore rupees. The company's net margin worsened to a negative 107.24%, meaning that it lost a little more than a rupee on every rupee that it earned. Its net worth turned negative, eroding to minus 28 crore rupees as of FY24. The company halted all its production in July. Here's Ratna.
They have an office in New Delhi, and no one is coming to that office anymore. And, salaries have not been paid. And the worst is that TDS has not been filed for over a year. So the employees are getting default notices, right?
The rot was in fact fully revealed when earlier this month, more than 250 employees at Bira wrote to its board and its top investors asking for the ouster of Jain. On Tuesday, this week, they wrote a similar letter to the government.
So they have written to the Ministry of Labour, they've written to CBDT, they've written to MCA, that is Ministry of Corporate Affairs, and they've written to the Labour Commissioner. Let me list out the key issues. Employees were repeatedly given false assurances with unfulfilled commitments of payments on multiple dates. There is a non-settlement of dues for laid-off employees, and full and final settlements remain unpaid for numerous laid-off employees and exit cases because half of the staff of Bira was asked to leave or they exited on their own. Also, it talks about non-deposit of TDS, and it says the estimated amount of unpaid TDS is approximately 50 crore, which is a serious offense under the Income Tax Act. It says PF contributions have not been deposited for 18 months and employees are unable to withdraw PF amounts due to non-deposits, violating the EPFO and Miscellaneous Provisions Act. Also, gratuity payment violation, medical insurance default, non-payment to support staff and vendors. And one more pertinent thing, the letter, and I quote directly from it, it says the company lacks a functioning office due to unpaid rent, and there has been no formal communication from the CEO, Mr. Ankur Jain, regarding employee welfare or future operations.
Here's Manu again.
This employee activism in Bira is remarkable. What's interesting to me is that in this case, the employees have fired the first shot. Usually what we have seen, especially in startups, is that the investors, the board will initiate an action and employees will remain mute spectator. But that's not the case here. So when employees have come forward, it becomes a question of livelihood and employment, and it gives a whole new dimension. So in startups, generally, we know that there have been founder removal attempts in many high-profile startups, be it Byju's or BharatPe. And some were successful and some were not. But it's first time that I'm seeing that there's a very strong level of involvement by employees in taking this forward. And if their demands are met, that would be a first.
But of course, it's not just employees that are seething.
So, Anirban, I've been speaking to some of the investors and lenders, and this is completely off the record. They're not coming on record because, it can go legal. So, I will not be naming them, but they have considered taking the company to NCLT because B9 has been unable to pay debts. And like we all know, they just don't have cash, right? There's also talk that in the third week of September, there were calls that were made by Kirin and Peak 15, which are the two largest investors in Bira, and Anicut Capital, which is their largest lender, and some other smaller investors too. They wanted Ankur Jain to quit, and they are willing to save the company. They are willing to invest more in the company provided he steps down. So now Kirin holds more than 20% in B9. A Peak holds, I think, 14%. Ankur and his wife and his mother themselves together, they hold about 17%. So the largest shareholder continues to be Kirin. And also the fact that the company has been talking about BlackRock investing in it, but BlackRock has walked out of the deal. They were in advanced stages earlier this year, but now they are no longer talking to B9 to invest in the company. So this is the financial stalemate that is currently on, and it is definitely going legal, this case between the lenders and investors and Ankur Jain. That's where it stands.
Here's Manu.
I can speak of the venture capital investor, which is Peak 15 here, which holds 18% stake. In their scheme of things, this could just be one of the investments which had really not given them great results. So there are some investments which are bound to fail, and this could well be one of them. And they can actually withstand this because they had withstood even greater fall of portfolio company. For instance, Byju's, which at one point was their crown jewel. But it only have very limited impact. For instance, they made 1.3 billion from the Indian public markets through the startup IPO wave that we are just seeing, and that's only going to go up substantially. So an underperformance of a $50 million investment wouldn't be of so much consequence in the larger scheme of things for Peak, and they can very well write it off.
Investors have begun to ring fence the businesses that are doing well. This is what also happened on Tuesday.
So basically, B9 is parting ways with Beer Cafe 3 years after B9 had acquired the pub retail chain, that is Beer Cafe, in an all-stock swap acquisition deal. The investors are ring fencing Beer Cafe, and they're buying out shares pledged by Bira 91. This is, my sources tell me that this is to secure Beer Cafe in case B9 is taken to NCLT by its investors, which is Kirin and Peak and Anicut. So for Bira, it means that Beer Cafe ceases to be a subsidiary of Bira, and Beer Cafe itself contributed close to 40% of Bira's consolidated top line. That will no longer be part of Bira, right? So a big chunk of B9's or Bira 91's business goes as Beer Cafe moves out. It exits out of this deal.
Mm-hmm. So that's bad news. I mean, good news for Beer Cafe, but bad news for Bira, right? Just in a nutshell.
Exactly. And this is the entire retail business. I think 30 plus beer cafes across India were obviously serving Bira. They were serving other brands also, but of course Bira was a mainstay for them. And also there was a thing called Bira tap rooms, which were like smaller pubs, which were also selling Bira obviously, and they were also under Beer Cafe. So both these businesses are moving out of Bira.
In all this, Ankur Jain has been in what Ratna calls denial mode.
First, he said, I'm not even aware of the letter in the morning when I asked him of the petition. Then I read it out to him, and then he said, okay. So he said, yes, there are unpaid dues. Salaries have been unpaid and TDS has not been filed. But he says that these are typical startup problems. So, this happens in businesses, and he continues to blame the name change. And he has no answers when I asked him about, excess spending on marketing and other allegations. So he says, no, these are very normal issues in startups. And the name change and the regulatory hurdle is what led to disruptions. And we are soon going to raise fresh funding.
On the investors' takeover of the Beer Cafe, he told her this.
He said that BTB, that is The holding company of Beer Cafe, that is Better Than Before, continued to be a wholly owned subsidiary, and the company had challenged the actions by its lender in court. Now, the ROC filings are very clear that this has happened. So, whatever Ankur is saying that it continues to be a wholly owned subsidiary doesn't really hold good. He also told me that some lenders have taken action with contracts which may be illegal and that B9 has disputed these actions. He said that Aniket Capital's action in the Delhi High Court and the court passed an interim order on October 17th, which placed a restriction on Aniket on any sale or creation of third-party interests on BTB shares. But the fact is that the ROC numbers, the ROC data is very clear out there. So Beer Cafe is moving out, or let's say has already moved out of Bira 91.
So is this end game for Bira or not? Here's Manu.
So already the company is facing bankruptcy issues. And it is very clear because Bira raised a total of around 3,400 crore and made a cumulative loss of around 2,500 crore up until FY24. So 1.5 years passed since then. So if we add the subsequent losses, which is not public yet, it is fairly clear that they may have already run out of cash. So in such cases, investors will sometimes infuse fresh money on some stringent conditions like management change, etc. Or they can put the company up for a sale and move on. And both scenarios are very much possible here.
And here's Poonam with the final word.
I think I have a very pessimistic view about the company. I really don't know what is going to happen because I don't know whether Kirin or Sequoia would be interested. They would certainly not be interested in infusing any more funds because they will clearly have to take a write-off of this 4,500 crores of loss that is already there. And Bira as a brand, I think the only thing the company now has is the IP because obviously they don't have any fixed asset. And I really don't think that, anyone would be interested in buying the brand name Bira because I don't think that it has any traction anymore. I think it has really, really taken a downslide. So I think it's all the best to these guys. And I just hope and pray that they are, the authorities somehow take cognizance of this and at least the employees are paid. The statutory payments are made so that, nobody takes any drastic step. I just hope that situation gets mitigated. The rest, I think Bira is history on it.
Bira's crisis isn't just about beer. It's about ambition outpacing execution. A craft dream undone by compliance, cash flow, and corporate complacency. For India's startup ecosystem, it's one more case study in what happens when brand cool outruns business fundamentals. That's it for today. This episode was produced by me and Vinay Joshi, sound designed by Amrit Reggie. A new episode of The Morning Brief drops every Tuesday, Thursday and Friday on your favorite listening platform. Also, don't miss our brand new show, Corner Office Conversation, where we talk to the most interesting business and thought leaders from India and the world. Every alternate Monday, wherever you get your podcasts. Stay tuned.